Welcome back to section 2, video 1 on investor. So as you guys probably had watched the previous videos and kind of had an idea of this between an investor and a trader, this video will be dedicated to investor. As I mentioned in one of the previous videos, every person that actually capable to get at least 20, 50, $100 a month of extra uh, from their budget into investment, they should definitely consider investing because we do not know what the future can bring us, and building that investment portfolio can make a difference in your life when it becomes time to retire. A lot of people are able to retire early due to either inheritance or actually parents starting early while they were still kids and investing into their kids' portfolio. Some people got lucky, built businesses, but even if you are building a business, that you are still in some form of investing your time into your future. And if you become successful, you actually have an opportunity to retire or have access to play money, as some people say. So, as an investor, you're not planning to put money in today and tomorrow pull those money out. As an investor, you're planning to put money in and hold it for a long period of time, whatever the time period you decided to be. So I hope that make a difference. So what are the different investment options? Investment options can be investing into somebody else's business, can be investment into your own business, can be investment into stocks of various different markets, can be investment into gold and silver. And I personally believe you should have 50% of your portfolio should be in gold and silver, not bought as a digital gold and silver, but actually bought as a bullion, where actually you order and it comes in the mail or they deliver it to you to your house. So 50% of your portfolio should be in gold and silver. That's personal my opinion. Some people out there might have various different opinion. So what other investment options can be? There's various different options. Even holding your money in the bank account under CD can be considered as an investment. But the question is, does your investment brings you a good return? So when you look at various different options, you need to ask that question: do you bring a good return on your investment? Does the investment pays you more than what's the inflation? As we do know, until this COVID thing, the average inflation was about 3 to 4% a year. And if you're actually investing at 2% CD, do you really actually having a good return on investment when you actually going 2% upside down? Some people actually taking out mortgages, but at the same time investing into stock. So the question is, if your mortgage is a 6% and your return on your stock is actually on average is coming back at 3%, is it a good investment? Maybe actually investing into your home and paying off that mortgage could be a better return on investment. So you need to definitely look at that. Gold has been averaging fairly a good return on investment over years as well. So when you invest and you actually have debt and you're paying on that, you need to actually calculate what is your best option on investment. Also, something new that lately have becoming and growing popularity on internet, and this is primarily all courses will be based on, is investing into crypto. Some people have built a huge wealth when they got in early on certain coins. And when I say in crypto, I don't mean just in Bitcoin. I mean there is hundreds and thousands of coins out there to invest. And the question is, which one? Yes, that is the hardest one to ask. And in some cases, the hardest one to answer. Which one exactly should I invest in? So, primarily, this course is actually talking about crypto. So, how do you divide your portfolio? As I already mentioned, 50% of your investments should be in gold and silver, in bullion gold and silver, not in digital, because digital can vanish at any time. So I'm not going to jump to the trading platforms and kind of mention a few things about that and then going to go back into portfolio. See, when you're trading digitally, is what you most likely will be doing for the next many years to go. You're actually giving your money to somebody and entrusting them that they actually will hold your money and actually will trade on your money, whatever you bought the gold or whatever it is. And in return, they will actually give that money back when that growth happens. But what if that platform, that digital platform you use, went out of business? Or they turned out to be the bad guys and they ran away with your money? Like an example, there's a lot of trading platforms in crypto, like even Binance.com. They're not regulated by nobody, and you cannot really take them to no court because they don't belong to literally to no country. So you cannot really even sue them if they run away from your money. So that's why when I say 50% in gold and silver, I'm talking about physical gold and silver. Why 50%? Because if all the rest is failed, gold and silver so far in this world has never failed yet. It never dropped to a value of zero. It always had its value, and a lot of times actually been the currency which people use to buy and sell with. So, as we finish off talking about dividing your portfolio, or at least dividing the 50% into gold and silver, the remaining part you want to divide based on how you feel. Follow one rule: don't keep all your eggs in one basket. So, I personally believe breaking up your remaining 50% by five. So you would actually choose five different forms of investment that you're going to put in. Maybe, like I mentioned, maybe put it into your friends or your family's business a little bit. Maybe put in some into a stock that you love, that you really have behind. Maybe part of that will be your 401k, which again, I'm against 401ks because they will disappear one day. But maybe part of that is your 401k. I would not recommend keeping all your money in 401k. I would not recommend keeping any of your money there, but sometimes you kind of don't really have a choice with the company you work with. And then, keeping some in crypto. And, when you keep in crypto, keep it in a couple different coins. So, next topic is trading platforms. As a investor, you're looking for a long-term return on your investment. So fees is not something that you really need to worry about because you're looking about tripling your money in a short to mid-term time. So example, you have 100,000, you're looking in 20, 30 years, turning that 100,000 to half a mil or a mil or 2 mil. So would you really care about a $50 fee that you'll have to pay to get to that mil or half a mil? I personally would not. So fees are not a big issue as long as it doesn't become a major problem, taking and chipping away a huge portion of your portfolio. But I'll definitely learn and consider the platforms you're going to be using to trade. As an investor, I wouldn't recommend a platform like Binance because it is designed primarily for traders. I would look more into wallet structure platforms. When you're dollar amount start reaching to about $5,000, I would actually move it into a hard wallet on, and I'm referring again to crypto. What is a hard wallet? Do some research on Ledger or go to ledger.com. It's actually a USB type chip that actually you would put in your computer, and you would actually download the whole. I do apologize. What is that called? Um, it's kind of like a history of a transaction, which actually proves that you are the owner of those money. And as you are investing in crypto, you know, do some research, study, watch some videos on YouTube. What is a hard wallet? What is wallet overall? But pick out a wallet that actually allows you to trade the coins you want to trade and allows you to send to remove your coins onto another wallet, which would be a hardware wallet, would be a ledger, is where you actually would be holding off the web. A lot, making sure that nobody cannot able to l- hack in and actually steal your money because it's very popular. Another thing, as you are using a wallet, be careful on the on the computer or the phone that you're using, well, that you're accessing anything that you do not know, because there is very popular of scammers actually sending various different things to you and your computer and your phone, like text messages and other way. So you can actually click on the link. It will they'll install a program onto your computer or phone, which will then they'll get access to your wallet and I can empty that out. So we actually be very careful on that topic as well. Do some researches on that topic. You'll be amazed how many people got burned because they were not careful. My personal opinion, you should not be clicking on any link on the web that you are not familiar with. If, even if I'm sending you a YouTube video link, you should not be clicking on that link. You should be taking at the end of the YouTube address. There is actually that video ID. You should be actually going and typing manually youtube.com and then searching that ID or searching for that particular video that I referred you to and watching it that way, because you do not know how they can actually come out, even change just the one letter that you don't won't notice, and you will actually end up downloading something that you shouldn't be downloading on your equipment on which you actually are doing investment or trading on. Now, there is some beauty part investing in crypto. If you invest in certain coins, they can be staked. What staking means is actually you're allowing company to utilize the money that you have in crypto. Let's say example, you want to stake a ADA, which is ADA is a Cardano. So with Cardano, you can actually stake Cardano, which means now you're allowing the company Cardano to use your money to build the company better. So pretty much instead of them going to the bank and getting a loan, they're actually getting a loan with you, and in return, then paying you a certain percentage that they're offering at the time. There's actually websites out there that allow you to get a loan against your crypto, and if for whatever reason you fail to pay back, they will actually foreclose on your crypto. So I heard some people actually been able to get loans and at the same time take advantage of the growth of crypto. So because when you get a loan, it doesn't freezes your ability to actually still earn the growth of the crypto, but at the same time it also allows you to pay in small enough of interest and pay it back and never lose access to that crypto that you put in as a security for that loan. Now, you might actually ask me a question. Okay, I understand. I'll do some research. I will follow more videos as you put up on this topic. But I want to get in right now. Perfect. You found a wallet that you're happy with. You got yourself a ledger. that you're going to be using down the road, and you're like, I have $50,000. I want to put it in right now. Plus, I'm going to put it in another $200 a month in addition. Very important as a investor. Regularly buying that coin or the crypto that you started working with. So let's say you decided to go with Cardano. So you started, you invested, and you can be doing that on a monthly basis. So you can be adding, buying $200 worth of new Cardano every single month. It doesn't matter if the price goes up or down. You're averaging because you're buying it every single month. You're averaging that dollar amount of value that you're putting in. Now, because I am suspecting, and so there's few other people out on the web are suspecting crypto to actually crash, and not just crypto, the whole all of the markets. I'm talking about stock market. I'm talking about crypto and all other markets out there, metal markets. All of those markets are suspected to actually take a serious and big dip in the near future. Some of them will cease to exist based on my personal opinion. Because of that, I wouldn't recommend you to put your $50,000 right away into ADA. Put in a portion of that in. Hold on to the remaining part of it in a safe environment. Is banking a safe environment? It's up to you. Hold it in the stock market? Probably I would not recommend. Now, when we reach that dip, that is when I would recommend you to take in that 50,000 or whatever part of the 50,000 you decided to keep and part of it you decided to put in whatever coin it is, and then going all the way in. See, if you put in a $50,000 and let's say ADA Cardano takes a dip of 50%, which from the price today, I am still suspecting Cardano to actually drop about 70 to 80%. You don't want to churn your $50,000 into $10,000. But if you capped your $50,000, let's say you put in 10,000, you capped $40,000 on a side, and when we do dip, and you put in those $40,000 in, when it recovers to the price where we are right now, you're probably going to churn that $40,000 into about 160,000, maybe 200,000. But what if that dip never happens? You can always throw those money in. But the regular $200 a month that you've been putting in, they're actually been averaging your earnings right away. So just keep that in mind. Now, which coins do you recommend getting in? Bitcoin is a very stable coin to trade in, but it gives you the least amount of return on your money. Is there possibility Bitcoin can reach $500,000? Yes, there is a possibility. But I also believe there's good a possibility Bitcoin might actually get stuck at a certain price and never grow again. Or there be another possibility Bitcoin might be replaced by another coin example like Cardano. A lot of people say, okay, I want to invest into Ether. Again, this is my personal opinion. My personal opinion, Ether has shot themselves in the leg by having a huge gas price under are buying Ether or selling Ether. And if you're going to use like a credit card or something and you decide to buy Ether, you'll discover the fee. The fee can go over 30% and even higher. As me personally, I experienced that huge fee on Ether. I am never ever going to own one because I don't want to pay that huge fee again. So a lot of people suspecting Ether to replace Bitcoin. My personal opinion is they'll probably take the same result as Bitcoin will either drop in price or maybe even cease to exist. Coins like ADA and few other coins, my personal opinion, ADA is ADA. That is the trading letters. Name is Cardano. I personally believe is one of the coins that actually will replace Bitcoin and Ether. Very popular coin to put your money into. I will be putting together a list of coins that, based on my and few other people's opinion, is a good coins to trade in, but definitely consider ADA to be one of those coins. I believe that's all I have for this video. As an investor, and as I mentioned before, every person that actually has an extra couple dollars at the end of the month should consider being an investor, even if they are still a trader. Blessings to all, and I'll be back with another video.